Welcome to Gold Cipher. If you drive for Uber, deliver for DoorDash, sell on Etsy, rent on Airbnb, or do any kind of freelance work, the IRS classifies you as self-employed. They don't send you a notice. They don't call your platform. Your first hint is often a massive, unexpected tax bill in April. This video changes that. Here are the 4 realities every gig worker needs to internalize before anything else. Reality 1. No employer withholds anything for you. Every platform, Uber, DoorDash, Etsy, Airbnb, pays you gross. Federal income tax, state income tax, Social Security, and Medicare are all entirely your responsibility to calculate and pay. Reality 2. The April shock. Most first-year gig workers face a large, unexpected tax bill they never budgeted for. This is completely preventable with the right habits, and that's exactly what this video covers. Reality 3. You owe 2 separate tax buckets simultaneously. Regular income tax, the same bracket system as everyone else, plus 15.3% self-employment tax on top. Both calculated on your net profit after deductions, both due at the same time. Reality 4. And this is the upside most gig workers never hear about. Self-employed workers have access to deductions that W-2 employees simply don't. Mileage, phone, equipment, home office, health insurance premiums, retirement contributions. Used correctly, these deductions cut your actual tax bill by thousands of dollars compared to someone earning the same gross income as an employee. The goal of this video is to make sure you use every single one of them. Self-employment tax is the number that shocks most first-year gig workers, so let me explain it with complete clarity. When you work a regular job, Social Security and Medicare are split with your employer. You each pay 7.65%. When you're self-employed, there is no employer. You pay both sides. The full 15.3% on every dollar of net profit. And this is in addition to your regular income tax, not instead of it. The breakdown. 12.4% goes to Social Security. 2.9% to Medicare. Here's what that looks like in real numbers. If you netted $30,000 from gig work after all your deductions, you owe $4,590 in self-employment tax. Your regular federal income tax on that same $30,000 might add another $3,000 to $4,000. You're looking at roughly $7,500 to $8,500 in total federal taxes before state taxes are even calculated. Self-employment tax applies on any net profit above $400. Even a small side income triggers it. Now the good news. There are 2 important offsets. First, you can deduct 50% of your SE tax from your gross income on Schedule 1, saving several $100s on your income tax bill. Second, every legitimate business expense you deduct reduces your net profit, which reduces both your income tax and your SE tax simultaneously. That double reduction is the most powerful financial tool available to self-employed workers. Because no employer withholds anything for you, the IRS requires quarterly estimated tax payments 4 times per year. This is not optional. Skip or significantly underpay them, and the IRS adds an underpayment penalty on top of whatever you owe at filing. The 2026 quarterly due dates are April 15th, June 16th, September 15th, and January 15th of 2027. Mark all 4 in your calendar right now. Paying is straightforward. Go to irs.gov/payments, click Direct Pay, select Estimated Tax, and choose the tax year and quarter. Free, no account needed, takes about 5 minutes. How to calculate your quarterly payment. Estimate your net income for the quarter, subtract business expenses, then set aside 25 to 30% of what remains. Send that as your quarterly payment. The second quarter covers only 2 months, April and May, which makes it easy to underpay. The safest and most reliable calculation method is the safe harbor rule. Pay at least 100% of your total tax liability from the prior year, 110% if your adjusted gross income exceeded $150,000, split evenly across 4 quarterly payments. If you hit that number, you are completely protected from underpayment penalties regardless of how much your income changes this year. It doesn't matter if you earn 3 times more. The protection is guaranteed. 6 major deductions that every gig worker must claim, and together they can reduce your taxable profit by thousands. First, mileage. This is typically the largest deduction for delivery and rideshare drivers. The 2026 IRS standard mileage rate is 70 cents per mile. At 20,000 business miles, that's a $14,000 deduction. Log every trip. Apps like MileIQ, Stride, or TripLog run in the background automatically. Second, phone and data plan. Deduct the percentage you use for business. If 70% of your phone activity is work-related, deduct 70% of your monthly bill. Third, platform fees. Every fee charged by Uber, Etsy, PayPal, eBay, 100% deductible as a business expense. Fourth, supplies and equipment. Delivery bags, packaging materials, tools, work-related gear, deductible with receipts. Fifth, home office. If you use a space exclusively and regularly for business administration, the simplified method gives you $5 per square foot up to 300 square feet. A clean $1,500 maximum deduction with no depreciation paperwork. Sixth, health insurance premiums. If you pay your own premiums as a self-employed person, 100% is deductible directly from gross income on Schedule 1. That's a deduction on top of your Schedule C expenses, not inside it. Here's the critical thing to understand about all of these. Every dollar you deduct reduces both your income tax and your 15.3% self-employment tax at the same time. That double benefit is exclusive to self-employed workers. The mileage deduction deserves its own dedicated slide because for most drivers it represents far more tax savings than any other single deduction. Let me show you exactly what it's worth. The 2026 IRS standard mileage rate is 70 cents per mile. Every business mile you drive, picking up passengers, making deliveries, driving to pick up supplies is worth 70 cents as a tax deduction. At 10,000 miles, that's $7,000 off your taxable income. At 20,000 miles, moderate for a full-time DoorDash or Uber driver, you're looking at $14,000. At 30,000 miles, a $21,000 deduction. Let me put that in tax savings terms. A gig worker in the 22% income tax bracket who also owes 15.3% SE tax has a combined marginal rate of roughly 37%. On 30,000 documented business miles, the mileage deduction saves approximately $7,700 in total taxes from a single deduction. Now the critical warning that goes with all of this. Mileage cannot be reconstructed after the fact. Once the year is over, there is no way to prove miles you didn't log. There is no receipt to produce, no bank statement to reference. If you drove 30,000 business miles and didn't track them, that deduction is permanently gone. Start today, not next month. Schedule C, officially called profit or loss from business, is the single form that all gig income flows through. Understanding how it works completely changes how you think about your taxes. Here's the flow. You start with all gig income. Every $1,099 NEC from Uber or DoorDash, every $1,099K from payment platforms, and any cash payments that didn't generate a form. All of it, reported or not, is taxable income and goes into Schedule C. Then you subtract every legitimate business expense, mileage at 70 cents per mile, the business percentage of your phone, platform fees, supplies, home office. The result is your net profit. This is the number the IRS actually taxes, not your gross revenue, not the total on your 1099s, not what showed up in your bank account. Your net profit after all deductions. From that net profit, two things happen simultaneously. The net profit flows to your Form 1040 where regular income tax brackets are applied. And the same number goes to Schedule SE, where the 15.3% self-employment tax is calculated. Every dollar you legitimately deduct on Schedule C reduces both taxes at the same time. A $1,000 deduction saves you both income tax and $153 in self-employment tax. For a gig worker in the 22% bracket, A single $1,000 deduction saves $373 in combined taxes. That's the double benefit that makes Schedule C deductions so powerful, and why maximizing them is the single most important financial action you can take at tax time. These 3 deductions are available to every self-employed gig worker, but most people either don't know they exist or don't claim them correctly. First, health insurance premiums. If you pay your own health, dental, or vision insurance as a self-employed person, not covered through a spouse's employer plan, every dollar of premium is deductible directly from adjusted gross income on Schedule 1. This is not on Schedule C. It's a separate, additional deduction on top of all your business expenses. A gig worker paying $500 per month for individual coverage deducts $6,000 from gross income. A family paying $900 a month deducts $10,800 before a single dollar of income tax is calculated. Second, SEP-IRA retirement contributions. Self-employed workers can open a simplified employee pension IRA and contribute up to 25% of net self-employment income, capped at $70,000 in 2026. Every dollar contributed is deducted from gross income, reducing both income tax and potentially self-employment tax. If you earn $80,000 net from gig work and contribute $20,000 to your SEP-IRA, you're only paying income tax on $60,000, while building retirement wealth the IRS can't touch until withdrawal. Third, business education and professional development. Any training or education that maintains or improves skills directly related to your gig work is deductible on Schedule C. Tax preparation software, professional books, business-related online courses, subscriptions to tools you use for work, all qualify. Most gig workers leave this line on Schedule C completely empty. 5 mistakes. And every one costs real money that never comes back. Mistake 1. Not tracking mileage. For drivers, this is typically the largest single deduction, and it is permanently gone once the year ends. There is no way to reconstruct miles you didn't log. There's no receipt, no bank record, no way to prove it. Download a mileage tracking app today, right now, before you close this video. Mistake 2. Spending all your gig income. The moment a payment arrives, set aside 25 to 30% into a dedicated tax savings account. Not a mental note. An actual separate bank account. Some gig workers automate a transfer the same day income arrives. Make it structural so it never requires willpower. Mistake 3. Skipping quarterly payments. Miss even one quarterly deadline, and the IRS adds an underpayment penalty on top of whatever you owe at filing. Pay all 4 quarters every year, without exception. Mistake 4. Mixing business and personal on the same card or account. When every gig expense and every personal expense share the same account, identifying every deductible expense at tax time becomes a multi-hour nightmare, and you will miss deductions. One dedicated debit card for all gig-related purchases costs nothing to set up. Mistake 5. Missing the 50% self-employment tax deduction. You can deduct half of everything you pay in SE tax from your gross income. Tax software handles this automatically. If you prepare manually, it's on Schedule 1, Part 2, Line 15. Verify it's there before you file. Here's your complete gig worker tax reference. Screenshot this slide and save it. Key numbers column. 15.3% self-employment tax on all net profit above $400. The 2026 mileage rate is 70 cents per mile. Set aside 25 to 30% of every payment for taxes. Deduct 50% of your SE tax from gross income. Quarterly dates column. April 15th for Q1, June 16th for Q2, September 15th for Q3, and January 15th, 2027 for Q4. All paid free at irs.gov/payments using direct pay. Deductions column. Mileage at 70 cents times every business mile. Business percentage of your phone bill. 100% of all platform fees. And separately on Schedule 1, 100% of health insurance premiums if you pay your own coverage. And for the long term, contribute to a SEP-IRA up to $70,000 in 2026, all tax deferred. Your action plan from this video. Download a mileage tracking app and start logging today. Open a dedicated bank account and transfer 25% of every payment into it automatically. Set calendar reminders for all 4 quarterly due dates. When you file, make sure Schedule C has every legitimate expense claimed. And check Schedule 1 for the health insurance deduction and the 50% SE tax deduction. The IRS taxes what you report, not what you were entitled to deduct but forgot to claim. Every deduction you miss is money you permanently give up. Track every mile starting today. Set aside 25 to 30% of every payment. Pay quarterly. Claim every legitimate deduction. These 4 habits are the entire difference between dreading tax season and filing confidently. Subscribe to Gold Cipher for new financial intelligence every week.